Hey everyone, welcome back to another edition of the weekly property market update with me, Rob Cohen.
And myself, James Wild.
Hope you're all well. We are here, as always, to give you some positivity, share with you as much good news as we can that we can offer on all of the latest data, intel, the market movements, the activity, everything that's happening on the ground, what we've been doing week in, week out, day to day, and let you know everything that's going on. As always, we start with the data. We've been extremely busy, inundated. I did say to you over the last few weeks, business end of the season, and that is really being shown in the numbers. I was very confident the numbers were going north. And I think, James, you're going to be sharing with us that that trend has continued as we expected and as we've been discussing over the last few weeks.
Yeah, thank you, Rob. So in terms of this week's data, as we mentioned last week, sort of ourselves in the market out undertaking mortgage valuations day by day. So sold figures for this week, 193. It's the highest we've seen since September, Rob, and that obviously was the end of the stamp duty holiday. So again, we spoke last week about the market and transaction volumes just having a slight dip in terms of that month of October, which if we look back at some of the other months of the year whereby in March, the initial stamp duty holiday, the figures in April were slightly subdued, and again in the July month. So if we look back on the data for November this month, I think the market has somewhat stabilised in terms of transactions, and this week, very positive as we move, into December. New instructions slightly down, Rob, in terms of stock. It's sort of an issue not just in London but on a national basis in terms of shortage of stock in various sub-market sectors across the UK, and buyers being very limited in their choice of property of which they can view and actually acquire in terms of the transactions.
I do think that's seasonal. I think we're now into December, and the reality is come this time of year, people are not flooding to put their properties on the market. We've seen a great run over the last 6 to 8 weeks of some stock coming on stream, and it's only normal and seasonal that now declines.
Yeah, it's often a quiet period over the festive period, isn't it? So in terms of buyers, they're often not actively looking in the months of December, so people often choose to either remove their property from the market or relaunch it, or have an initial launch in the sort of January period. So hopefully when we return after Christmas, we see these the new instructions, that these sort of creep back up over sort of the 300, 400, 500 per week.
Yeah, and in relation to the under offers and sold figures?
Yeah, under offer figures this week, we're at just under 225 for this week. It's another strong week of under offers, which again, Rob, that's really feeding through to those weekly transaction figures which we're seeing, and they've been strong throughout the month of November.
Absolutely. I think we're really busy. Those under offers convert into valuations, and so it looks like from our side that we're going to be pretty inundated all the way up until Christmas, and a bit of promotion here. We do remain open throughout the year, Christmas and the New Year, and I think this year we're going to have to stay open, because it does look like that with the under offers that we've seen over the last week and the conversion of those into mortgage vows, it's going to require us to be working the rest of the month to get through that.
Yeah, and There were some signs, like we said, of the market cooling in October with the transaction volumes being at more subdued levels. However, the live data which we bring you every week, and also as well as our anecdotal opinions which we're bringing you, and what we're doing live on the ground, indicates sometimes a differing data source, of which there's often delay in terms of the ONS statistics, the land registry, and what they are reporting some months later after the event has happened.
I think what's great, and hopefully the audience, our clients and people watching, what's great about the show and the data and the intel is it's so live that when we sit here at the beginning of December and say there's so much work coming through that we're going to have to work through the month, and the data correlates, there's a tangible result with that data, you can't get more live and instant than the information that we're actually providing, and I think hopefully that's what people enjoy the most about the updates that we're providing here.
Well, exactly, Rob. Just in terms of some other property statistics, in terms of how the market is performing currently, reported last month nationwide there was 9.9% annualised growth. It's actually crept up to 10% this month on the nationwide house price index, with the average cost of a house in the UK now standing at just under £253,000. It's gone up significantly since the start of the COVID pandemic, and some more positive news there in terms of Q4 2021.
Absolutely, the demand is outweighing supply in the market, basic economics, which is in turn seeing these price increases, and as the nationwide index and both the Halifax as the leading indicators for lending and transactions in this country, as nationwide being the market leader. That data is just a reflection of what we've seen.
That's it. And in wider economic terms, the labour market, in terms of the conditions there, these remain fairly robust despite the end of the furlough scheme at the end of September 2021, with unemployment currently at around 4.3% there. So I think that's a strong economic indicator, Rob.
Absolutely.
But we also brought everyone news a couple of weeks ago in regards to the earnings to house price ratio, and I think at that point in time we were at about 6.5. I just wanted to talk about that briefly as we come to the end of the year. Now, sort of, of an average earnings in the UK as a whole is around £29,000, depending on which indice you look at, and also depending on which indice you look at in terms of the average house price being in the region of £250,000. That sort of gives you an indication of where the multiplier, where the ratio lies, around sort of 8 to 8.5, depending on which of the statistics you use for your calculations. Here in London, that ratio is closer to around the 11 mark, so it's a staggering ratio. But so without the incentives that some of the government is doing at the moment, the help to buy, the government-backed mortgages of 95%, which have come online in the last few months, home ownership is just completely unobtainable for a lot of the first-time buyers here in London. And as we forecast, given some of the analysts, they're forecasting quite steady growth for 2022 in terms of the UK property prices, both nationally and in London. Mortgage costs are likely to rise in 2022 if interest rates going up are inevitable. So mortgage costs are going to rise next year, and therefore this affordability gap, I think it's surely going to widen, isn't it, Rob, as we move into 2022?
I think this is one of my favourite subject matters over the 30 years that I've been in the industry, sitting with the banks and the credit committees and the risk teams. Are we now 10 years on from this ultra low interest rate marketplace? Are we now in the position where actually affordability and the ratio should not be based upon the repayment of the entire mortgage? it should be based upon the affordability factor of repaying payments on a monthly basis due to the fact that we're in this ultra low interest rate period of time. And so the question may be, or the affordability basis should be purely on the fact of repaying monthly payments rather than the ratio and multiplier of having to pay back the entire amount of the cost of that property using a single wage or a combined wage. And I think that's the question moving forward on affordability. Are we going to focus just on the monthly mortgage payments rather than the actual cost of the asset?
Yeah, I agree, Rob. And there is always some new initiatives which both the government and the market is trying to introduce. We've got mortgage terms now in excess of 40 years. So people are, the problem there is if people don't buy a house sort of reasonably early in their sort of working career, they're literally they're not going to be able to have the working time frame to be able to sign up for a 40-year mortgage, which I think is one of the issues of the affordability ratio there. You've got to sort of be able to be earning sufficient amount of money and have time to save for a deposit to then get on the housing ladder to enable you to take out those long mortgage terms. In other high street news, Rob, sort of as we've tried to sort of focus on that recently, the clothing brand Gymshark, which has been exclusively online since it started up, it's opening its first ever bricks and mortar store, which will be on Regent Street and will also include some sort of workout studio space. That's opening next year, and it's on a new 10-year lease from the Crown Estate, but. Positive news for the high street there. We've got sort of a number of tenants have moved out from that cross of sort of Regent Street or Oxford Street. So some positivity there of a new entrant to the high street market. I mean, they're a £1 billion business, and they haven't got a bricks and mortar store. It's going to be the first one, so quite an exciting.
I think that's really exciting. I've been walking the streets of London as I do as part of my job, and. Just going down Regent Street, Oxford Street, and a lot of the roads around, a lot of fit outs are taking place, whether that's in the hospitality, restaurants or bars or retail. I'm very, very positively impressed by the amount of building work that is taking place for units, and I'm excited about 2022 and the either reopening of the high street to its full potential and the new entrants that we're going to see. I think it's going to be a really positive year ahead.
Positive. And in terms of supermarkets, I know Aldi have opened a new store today in Orpington, whilst there's also stores in Haringey and Cheam which are going to be opening this year in 2021. We understand that each of these stores is creating up to about 30 new jobs, which is positive for the job market there, whilst also having multiplier effects with in terms of the supply chain of those stores. The budget supermarket's now got 50 stores alone. That's Aldi in London, as it sort of battles with Lidl for that additional market share in that sector. It's got some smaller convenience stores as well. They've sort of moved more into that sector ahead of Lidl, Aldi. They've got they did an initial trial in Balham a couple of years ago in 2019, and they've since opened a few more stores. I think one of the latest have been on Camden High Street, which opened earlier this year. So some more supermarket news there. Obviously Aldi and Lidl trying to get back some of their market share which was lost over the pandemic due to their sort of fairly limited online marketplace.
I mean, I do love that space, and a bit of a supermarket stroke retail. Hampstead High Street has seen Gap close, and it's seeing the new entrance in the Gap store as Sainsbury's, which is a really interesting play. And then there's in Tottenham Court Road, Regent's Place, I believe it was the old Evans Cycle store. That's now going to be a one of your favourite, James, one of your Amazon
Amazon Fresh store.
Fresh, and so I love the fact that the supermarkets performed so well over the last 2 years, and when you see certain retailers that didn't, but then the space is being converted, that's just the makeup of competition and supply, demand, and areas performing and areas that are non-performing.
That's it. I think, like we've seen, Rob, even these national chains are having to adapt to the market, as we've seen in the last 18 months or so. Tough weekend last weekend for much of the country with Storm Arwen that hit the country, caused much damage to houses and obviously trees coming down, and condolences to those which were killed in that storm, actually, and anyone that's been affected. I think 5 days on, there are still some people in the north of England without power, unfortunately, there. So hopefully things are restored there, just in terms of the news there. And obviously the Omicron coronavirus variant continues, and there's a lot of uncertainty about that, with the government moving back to more stringent mask regulations, with new travel restrictions and quarantine restrictions, with also changes to the booster vaccine as well. You can now get that 3 months after your second dose. I think previously it was 6 months, Rob. So the government is trying to make early moves there to try and do as much as they can to stop the spread of the virus.
I think it's a critical moment for the country, the economy, heading into deep, dark winter, and all we can do is hope and pray that we get through this winter in a better, stronger way than the previous winter, and that 2022 is a healthy and prosperous year for everyone in this country and obviously across the world. So let's hope that the next few weeks go as well as they can do under the conditions that we're under, and that we can embrace a new year with positivity.
That's it. What do you think? Odds on a white Christmas this year, Rob?
Well, it was pretty cold earlier this week. It was bitter. There was lots of snow up north at the weekend, so I think there's a chance.
Fair chance.
Fair chance. Brilliant. Thanks for everything this week, James. Really appreciate all your data, intel, and insight. Thank you, everyone. As always, lots of questions and emails keep flooding in. The audiences keep supporting us. The social media platforms are vibrant thanks to you, and we will keep providing you with as much insight and knowledge as we can, and we will see you all again next week. As James said, keep safe and healthy. That's the most important thing, and we will continue providing you with as much information on the property market, on lending, on finance, and on the industry itself. And take care, be well, everyone, and we will see you all next week. Thank you.
Thanks so much, Rob. Thanks, everyone.